Okay, let's mix things up a little bit and go to business early. Nicholas Poynton is joining us now. Nicholas, so Sky TV has reported its full year result. Tell us about that.
Yeah, well, it's another full year loss for Sky TV, but to put it in blunt terms, they've taken a hit this year, but it's nothing like the hammering they took last year. It posted a $157 million loss for the full year ended June, which really pales in comparison with the $608 million loss they took last year. The latest result does include a hefty $171 million write-down in the value of its business, but once again, it's not quite as bad as last year. If you strip out all those big one-off costs, Sky posted a $41 million profit. Its revenue did fall by about 6%. That's because they did suffer a decline in advertising revenue as a result of COVID-19. However, they do say the appetite for its streaming services was up by a third. Unfortunately, though, that increase in its streaming services isn't really enough to offset those losses they've seen in their satellite customers. On the surface, though, if you do take this result, considering all the things that's been going on, it's really in line with a lot of those other company results we've seen. We did know that a lot of companies would be reporting some pretty ugly losses for this most recent financial year. However, the thing that investors will want to be knowing, and a lot of analysts will be paying attention to, is the outlook. What is this company's plan for the future? And with Sky, they do have quite a positive one. They are predicting a return to profit next year. Their chief executive sort of outlined how they were going to do that. They say they're going to roll out a new broadband product so people can watch what they want, when they want, and how they want. They're going to improve the offering of its satellites operations. So that's for people who still have a set-top box. They may seem outdated for many people out there, but they are still really important for those people who live in regions where their Wi-Fi maybe is not really up to scratch to really service those streaming services. It has also acquired the digital streaming service Lightbox. You pair that in with what they already own in Neon, and they're going to really have quite a good chunk of the subscription video on demand market. So all in all, look, there is some real upside for this company, but it seems that investors aren't really impressed with the result. Its share price is taking quite a hit over the course of the day, even though the company's talked about having a bottom line profit of between $10 and $20 million for the current financial year. It is worth mentioning that its share price did gain about 20% in the previous 3 days, so maybe there has been a bit of speculation going on there. So to look, the Sky, their share price closed today at closed down 10.8%, which is about a 3-cent drop on its stock price. So it's sitting at 14.8 cents a share. And now that we're talking about the markets, let's do a quick wrap of what's going on in the NZX. It really rallied today after those falls we saw early in the week as a result of the big tech sell-off in the States. It's up about by 0.6% or 73 points to 11,812. Our dollar is at 66.8 US cents, 91.8 Australian, and rounding us off at 51.2 British pence.
Thanks, Nicholas. That's Nicholas Poynton with our business news.